Will the US dollar remain the world's reserve currency? In the ever-shifting landscape of global economics, one question dominates the minds of investors and policymakers alike. Can the US dollar sustain its prestigious status as the world's reserve currency? As economies evolve, debts surge, and political dynamics fluctuate, this debate gains even more traction. Today, we dive into this complex issue, unpacking insights, facts, and potential outcomes that could shape the financial world as we know it. For decades, the US dollar has been entrenched as the ultimate symbol of stability and trust in the global market. Its role extends beyond mere currency. It is an anchor in which global trade and investments find stability and reliability. This enduring trust in the dollar has granted the United States significant economic leverage and diplomatic power across the world. But what pillars have held this trust intact all these years? The dollar's dominance arose post-World War II when international agreements, like the Bretton Woods system, established it as the backbone of global financial architecture. Since then, the dollar has maintained its foothold, with central banks and international businesses relying heavily upon it for global transactions. The US dollar boasts several strengths that underpin its global status. Primarily, it benefits from the sheer size and stability of the US economy, which remains a powerhouse of production, innovation, and consumption. International confidence in the Federal Reserve's monetary policy further enhances this perception, providing reassurance in times of crisis. Moreover, the dollar's liquidity and global acceptability make it a preferred choice for reserves, highlighting its irreplaceableness in current international trade systems. From oil transactions to massive trade agreements, the dollar's imprint is undeniably prominent. However, no currency dominance is without challenges. The US economy faces pressing issues that could undermine the dollar's position. Rising national debt, potential fiscal mismanagement, and increasing political polarization add to the uncertainty that could tarnish the dollar's appeal as a reserve currency. Moreover, inflationary pressures or shifts in monetary policy could impact the credibility and stability of the dollar. As these realities unfold, it becomes crucial for investors to scrutinize whether these are temporary fluctuations or signs of a waning dollar. In this shifting landscape, the Chinese yuan emerges as a formidable contender. China's economic strategy has significantly influenced global trade volumes, opening discussions on currency alternatives. With aspirations to elevate the yuan to a competitive status, China has strategically integrated itself into international financial frameworks and is seeking alliances that favor the acceptance of its currency. The yuan's rise is not without merit, but can it truly replace the dollar? While impressive strides have been made, including China's push for its currency in cross-border trade, the yuan still faces significant hurdles. Its convertibility issues, coupled with China's tightly controlled economic policies, challenge its adoption as a global reserve currency. Moreover, investor skepticism regarding China's socio-political environment underpins hesitation to fully embrace the yuan in place of the dollar. Despite these limitations, the growing influence of the yuan remains a trend to watch closely. The world economy exhibits a sturdy inertia in favor of the dollar, posing formidable barriers to any rapid transition. Existing global financial networks are so interwoven with dollar transactions that diversification efforts could lead to significant disruptions. Nonetheless, we cannot ignore the shifting forces in economics. Potential changes in global political landscapes and evolving economic dynamics suggest that a multipolar currency system will not remain merely hypothetical. In such a scenario, diversification of reserve currencies could become a practical possibility. Should a seismic shift occur, its repercussions would ripple across global economies. Nations would restructure their trade and economic policies, adapting to a new norm where dependency on one reserve currency might be less prevalent. For countries heavily relying on the dollar, transition challenges could amplify costs and create volatility. thereby necessitating strategic adaptations in their fiscal planning. For investors, these dynamics demand vigilance. Currency shifts significantly affect investment landscapes, where exchange rates influence returns on foreign investments. Maintaining an updated perspective on international fiscal policies and potential currency fluctuations becomes essential for tactical portfolio management. This brings us to a critical discussion point. Is diversifying reserves a prudent strategy, or does the steadfastness of the dollar still promise unrivaled security? Advocates of diversification argue that relying solely on the dollar exposes economies and portfolios to unnecessary risks. Meanwhile, proponents of stability emphasize the historical performance and unmatched liquidity that the dollar offers. Recent trends reflect an increasing inclination among some nations to explore alternatives, at least partially, to dollar dominance. Trade agreements circumventing the dollar demonstrate a nascent shift, prompting investors to weigh these signals. Economists and financial analysts offer varied perspectives. Some predict an inevitable decline in dollar reliance due to structural economic changes, while others believe its foundational role will withstand any transient challenges. Understanding these viewpoints provides valuable context for investment strategies. Looking back, historical precedents of reserve currency transitions provide valuable lessons. The shift from the British pound to the US dollar post-World War II highlights potential causes and impacts, offering important insights into possible future shifts. Technology further complicates currency dynamics. Cryptocurrencies and digital advancements prompt questions about the traditional reserve currency framework. Central bank digital currencies, CBDCs, are especially intriguing, speculating potential integration into mainstream financial systems. Geopolitics inevitably influences reserve currency status. Diplomatic relations and international alliances shape preferences and perceptions, and these political shifts could undercut or bolster market faith in established currencies like the dollar. Central banks play a pivotal role in sustaining or challenging the dollar's status. Policies and strategies can buttress or destabilize national confidence in currency markets, affecting global trust in reserve currencies. Market stability hinges on currency predictability. Rapid fluctuations can unsettle markets, affecting investors globally. Thus, understanding currencies within a broader macroeconomic and geopolitical context helps hedge against unwarranted risks. Ordinary consumers also grapple with the implications of reserve currency changes. Fluctuations translate into direct economic costs, influencing everything from import prices to investment growth potentials. While forecasting remains speculative, examining indicators such as foreign reserve shifts and central bank policies reveals possible trajectories for the dollar. Predictive models are tools, but remaining adaptable to emerging realities proves crucial. Economic multipolarity is no longer a distant possibility, but an impending reality. Diversifying our understanding of currency methodologies could create, paradoxically, a more resilient and adaptable economic system. Nations assessing diversification face opportunities and risks. Strategic approaches to reserve currency management will define successes and shape their economic futures. Theoretical frameworks offer foresight into potential outcomes of currency shifts. Currency dominance aligns with broader economic strengths, mandates alignment between fiscal policies and geopolitical climates. Global institutions like the IMF and World Bank are already adapting to these shifts, initiating policy changes and restructuring efforts. Their perspectives and reactions will be pivotal in shaping future pathways. Examining specific country transitions offers insights into the complexities of currency shift attempts. Both successes and failures underscore the difficulties and realities of changing reserve dependencies. Currency shifts impact global trade dynamics as policies adjust to align with prevailing fiscal narratives. Understanding these shifts becomes key for investors and nations alike in strategizing for future engagements. The integration of digital currencies remains a contentious topic. With each step towards central bank digital currencies, we inch closer to a financial world where traditional reserve systems are redefined. Against this backdrop, investors must remain informed and proactive. Adapting portfolios in anticipation of potential shifts could prove opportunistic or provide necessary hedging. As we ponder the fate of the dollar, these insights guide us toward understanding and preparing for whatever the future holds. While nothing is certain, maintaining a strategic approach rooted in research remains indispensable. For more in-depth discussions and critical analyses on crucial economic matters, subscribe to our channel and stay one step ahead in the evolving landscape of global finance.